Today, we're doing a deep dive into what's happening with Canadian home prices right now.
Yeah, there's been a lot of movement, or rather downward movement.
Exactly. We're looking at analysis from the REM editorial team and especially insights from Darren King, an economist at National Bank of Canada.
He's flagged some important signals.
Right. So our goal today is to really unpack why prices are sliding and, what the key drivers are behind this trend. We want to help you understand the real dynamics.
Let's get into it.
Okay, so the numbers first. Canadian home prices, well, they've kept falling through the spring. That's 5 months straight now.
5 consecutive months, yeah.
And the Terranet National Bank Index, which is a really good measure tracking repeat sale.
Right, it avoids comparing apples and oranges. It tracks the same properties over time.
Exactly. That index fell 1.6% just from April to May this year.
And that's seasonally adjusted too, so it's not just the usual spring market fluctuations.
Good point. Which means overall prices are down about 3.9% just since December 2024.
And May seems to be quite significant, according to King.
Yeah. What did he say?
He called it an important turning point because for the first time in, 22 months?
22 months.
For the first time in 22 months, that composite index actually went negative year over year.
Wow. So comparing May this year to May last year.
Exactly. Down 1.6%. That's a big shift away from the seller's market we've, gotten used to.
And it's happening when the resale market is already looking a bit weak.
Yeah, King links some of that weakness to broader economic uncertainty. Things like trade tensions can really affect confidence.
Okay, so King is warning that even if sales pick up a little, prices will probably stay under pressure. What's keeping them down?
Well, he points to a few key things. First, just that general economic uncertainty we mentioned. People get cautious.
Makes sense.
Then, population growth is described as moderate. Maybe not the huge demand surge some might expect right now.
Interesting, given immigration levels.
Right. Plus, there's a risk that long-term interest rates could stay high, keeping mortgages expensive. And critically, there's just more homes piling up for sale. An accumulation of inventory.
So more supply, maybe softening demand, high borrowing costs. Yeah, that sounds like pressure.
Exactly. It's sort of a perfect storm for downward pressure on prices. Even if transactions tick up slightly, supply is catching up.
And it's not hitting everywhere the same way, is it? The regional picture is quite striking.
Oh, absolutely. The pain, if you want to call it that, is really concentrated in the least affordable provinces. We're talking Ontario and BC.
Right. What do the numbers show there?
King's data showed 90% of the markets tracked in OnFin and BC saw prices fall in May.
90%. Wow, that's 18 out of 20 markets.
Yeah. Compare that to the rest of Canada, only 27% of markets outside OnFin BTCL declines. That's just 3 out of 11.
That disparity is huge. It really highlights where the affordability crunch was tightest.
Precisely. And this leads to an interesting point about the overall market condition. Even with the small rise in national sales activity, things have eased overall. They're now calling it a balanced market.
Okay, but balanced sounds good, yet prices are falling, especially in those big provinces. How does that work?
Yeah, it's crucial not to confuse balance with stable prices right now. Think of it like sellers had all the leverage for years. Right?
Yeah.
Now buyers are pulling back, especially where prices were highest, and things are settling more in the middle. This balance is actually the result of the correction happening, particularly in ONN and BC.
Okay. So the balance is driven by conditions becoming much better for buyers in those specific previously overheated areas, leading to those price drops.
You got it. Persistent affordability issues there are forcing the correction.
So wrapping this up, the key takeaway for you is that the Canadian housing market is really shifting gears, big time.
Especially in Ontario and BC. Economic factors, more homes for sale, they're really putting the brakes on prices.
It's redefining the whole market dynamic.
Which leaves us with a question for you to think about. If the market is now called balanced, while prices are still falling in key areas, what does this new equilibrium actually mean?
Yeah, what does it mean for buyers hoping for affordability and for sellers who are facing a much softer market than before? What are the long-term effects of this kind of balanced correction?
Something to definitely keep an eye on.